What's up, everybody? Backseat economist here. I'm back at it. Been a couple months here. Been on some trips here for work this summer, so kind of had to slow down in my video production there. But I'm back in the office, and there's been a lot going on, so I'm not gonna waste any time here. Gonna get back into the latest happenings in the economy, both in a macro sense and a little bit of a micro sense. So. Big picture, the inflation fight. We are still battling record inflation, but I have good news, and so I want to kind of, I don't have good news. I'm just interpreting the good news that was given to me by the Bureau of Economic Labor Statistics. But one of the ways in which the Fed has been fighting, I had a previous video. One of the only ways the Fed has to fight is the rising or the raising of interest rates. So they have two things they can do, right? They can affect the monetary supply, and they can affect the rate at which banks borrow from them and the rate at which banks can borrow from each other. By raising both the rate and by decreasing the money supply, the monetary supply as a whole becomes tighter, and the value of the dollar as a whole becomes stronger. And as I'm sure have already heard or already know, have found out, inflation is the devaluing of your dollar, right? So as a American, the dollars that you have in your wallet go less less in value towards what you are trying to purchase. So they don't go as far as what I was trying to say. So it takes more of that same dollar to purchase things that used to require less, right? The value of every dollar that you have is a little weaker. So by raising the interest rates and restricting the monetary supply, we are actually making the value of every dollar a little stronger, which obviously you can see is opposing to what the effects are of inflation, therefore reducing the effects of inflation, right? That's the idea. A stronger dollar value right now is starting to really take root. And in addition to that, we also see an increase in demand for goods and energy that America has been producing. Not to get partisan, right? I'm in no way do I subscribe to one party. In fact, that's one of my least favorite things about America is the two-party system. But I digress. So there has been an increased demand in goods and energy, and the energy part of it is interesting because Joe Biden and his record on U.S. Energy production, fossil fuel energy production, has not been great. He's kind of been very opposed to bolstering that industry or promoting that industry in any way, and yet our demand for our energy has coincided with his presidency at a time where not only is the world without Russian oil and Russian energy, but they are demanding a replacement, and America is the natural party to step in to replace that, right? So at the same time that he is willing and wanting to ramp down production and start moving towards green and clean energy and all that, the world as a whole is saying, wait a minute, we need you here, and we need you bad. And so it's also a good thing for Americans and consumers for us to ramp up our own energy production, for obviously us as Americans and not being quite as dependent on foreign energy, but also for the idea that we can produce more as a country, sell it, and therefore prosper more as a country as we sell more of what we produce, right? So our goods that we produce can go up, lend towards a higher growth, and put more money in the pockets of our people. So although his policies have directly kind of restricted and choked off energy production, at the same time, the global demand for U.S. energy has gone up. And that overall, plus the global demand for goods, mostly food and services, again, big big factor resulting from the Ukraine-Russia war is that we have actually seen a trade deficit that we normally have narrow by 5.3 billion. So for those who aren't familiar with a trade deficit or what it is, essentially what it is as a country, we bring in on a yearly basis for the past probably 30 plus years, we bring in more than what we export, right? So we import more than what we export, meaning we are having to buy more than what we are creating and not only using for ourselves, but sending out. So as a whole, we are buying more than we are producing, which is not a great sign for the economy, right? If we are buying more than we are producing, then that means we are more reliant on foreign countries and their production, and therefore their own price hikes or variations in price. But it also means we're not producing enough for our own citizens, right? So that's an issue. And then it also means that we are making money, right? So the people that would produce and sell now aren't making that type of money because we are being supplanted by other countries who are doing that. So it's overall a total bad sign to be pulling in and buying more of other countries' goods than what you're making for yourself and selling. And that's been going on for many years, and that has led to a slow GDP, right? And I've talked about this before. I'm not going to go into it too much now, but GDP is obviously our main metric on how strong our economy is, how it's growing, right? Our gross domestic product, what we are producing as a country. So the deficit is narrowed. It's a good thing. Exports are up 1.7%, and our imports are down 0.3%. So these are all statistics from the month of July and June, mainly July. Nothing's out yet for August, so nothing to report there. But yeah, for those 2 months is good. So we're heading in the right direction, and this is also kind of a side effect of the COVID outbreak in China and how they had to kind of shut down their exporting of goods as well. We're just straight up not importing as much as we normally would from China. Therefore, our import numbers are down. Therefore, our deficit was able to close a little more. So yeah, increased production to European nations due to Russia's and so facto craziness and not exporting what they would normally, and China's COVID outbreak, also not exporting what they would normally, especially to us. So a good time for us to kind of supplant both China and Russia, right? Not just globally, but for ourselves. And you've seen, again, not to be partisan, I don't care which way you go. These are just facts. You've seen actually the current presidential administration take advantage of that. They've instituted this new investment into microchips, where they've really made it such that it's really to the American software and computer engineering companies' advantage to start generating and processing microchips, and that was in the last bill that he signed before the Inflation Reduction Act. It's like something like a $50 billion investment into U.S. chip plants. So that in itself will allow us to kind of start to supplant some of these other countries as they take a backseat, either because of these diseases or because of wars. And once we're in that hot seat, hopefully we don't give it up, right? But this is a great chance for us to do that. And in some ways we've taken advantage of it. Again, energy-wise, not so much. Biden has not loosened anything energy-wise, so we will. I really don't even know how we are exporting what we're exporting as far as natural gas goes, and that's been the majority of our energy exports has been natural gas. Natural gas has been new pipelines and new drilling has been cut off so much that I'm not sure where the extra natural gas is going from, other than I guess just the existing infrastructure that was already in place, and whatever surplus they had, they're pushing it out, and we'll gladly push it out, but think about how much better off we'd be if we were still growing our natural gas sector. And if it was even a fraction of where it used to be, under the previous administration, how much more money our country would be bringing in and how much more our deficit would close because of that, how much more we would be exporting, right? So the positive effect we're seeing would be, you would think even greater. But again, not to get partisan, but at the moment, we are not really exploring too many ways to take advantage of the energy vacuum, the energy export vacuum that's happening. We are using what we have, but we are not growing our natural gas export industry at all. And in fact, this Inflation Reduction Act somewhat does not support us going to grow it anytime soon. But with the narrowing of the deficit, with the increase in exports, with the decrease in imports, our real GDP for the month of July is looking good. It's still a decrease. So overall, that's not good. It's been decreasing for quite some time. But it's decreasing at a slower rate. So it's decreasing at an annual rate of about 0.9%, where as opposed to last quarter, it was decreasing at a rate of about 1.6%. So that's a slower rate in which it is decreasing. And so hopefully we're looking at turning a corner soon with our GDP, and hopefully it is going to be increasing soon. That's the idea. And we can get back to a overall net increase in GDP, or a much higher increase than at least what we saw in the previous years. The way that the GDP growth has been looking so far, it has really been pointing towards the signs of a recession. So this is the first time we've seen any numbers go in the opposite direction of what has been fingers pointing in the direction of a recession. Surprisingly, again, not partisan, but when people see a Democratic president residing over a Democratic majority Congress, they typically think of a high spending administration and of higher spending, especially on things like social welfare programs, and any really just social needs in general. People think of those types of administrations as increasing spending, and a lot of times they do. To be quite honest, usually almost any presidential administration has increased spending for quite some time. That has just been popular in general. There are always things to spend money on, or there are always reasons to cut the amount of money that you bring in, i.e. taxes. So in any case, we have actually seen a slower rate of government spending, which is surprising. Again, because of the party affiliation that the current administration is in. So the actual lower government spending has led to a decrease in the rate at which our national debt is growing, which is another piece of good news. So lots of good news for this previous month, which is hopefully welcome for most of you, because I'm sure a lot of you are used to bad news, especially in the economy, right? So I don't know if the news has been focusing a whole lot on these positive aspects, these positive numbers, but they're there. It's all part of the U.S. Bureau of Economic Analysis. You can look it up at any time. They're there. They're real, and it's recent. I'm not talking about another time here. I'm talking about the most recent results. So hopefully, I don't watch a whole lot of news myself. So hopefully, these are things that are being discussed and people are aware of. If not, thank you for watching my channel and hearing about it firsthand here. All of these great or good directions that we are now heading economically, and hopefully will continue to head, hopefully they'll continue to get better, has produced a surprise, lower inflation rate, right? So spent less money, right? The Fed's raising the interest rates. We're spending less money. We're pulling money off of the market. The Fed's taking the monetary supply down, and the inflation rate has fell 0.5%. And the inflation index only rose 9.8, which I think for the past couple quarters, it had risen like 11.3 and 11.7%, right? So much higher gains in the index was what we're used to in the past year. And we're not used to it falling. We're used to it slowly increasing. So again, good signs. Good signs. We're heading in the right direction. The looming piece of concern I mentioned earlier, and there's good and bad things to it, but the Inflation Reduction Act, right? So just at a time where we are seeing things kind of coalescing to give us a more positive outlook than what we've had anytime recently, we've now got the Inflation Reduction Act that just was signed into law on Tuesday. So I'm going to have to do a whole separate video on that because it is very involved with what's in it and how the media believes that what's in it will affect the economy and what is most likely to happen just from economic analysis. But in any case, I will talk to you all then. Appreciate your time, and till next time, have a good day.